As a Forex trader, there's so much information to try and understand. So how do you know what is the best information to read and how do you understand it? Let's talk about that and more right now. Hi Forex traders, it's Andrew Mitchem here, the Forex Trading Coach, and in today's video and podcast, I want to talk about what's happening in the world right now within the news, the whole global economy, and how you can read and understand that information, absorb it, and then take that through to your trading and make some money out of the currency market, because it's quite difficult. You know, there's so much information out there, and from what I can gather right now, there's a lot of doom and gloom out there. You know, they're talking about another recession coming, oil's getting lower and lower. You know, it hit $30 and it's now gone down lower. Potentially 20s now the next level. Commodity currencies like the New Zealand dollar, the Aussie, and especially the Canadian dollar are getting an absolute hammering. And so you just sort of trying to read all that information, absorb it, and think, well, how can I best trade? Now, for me as a technical trader, I like to trade what I see on the charts, and I'll give you some examples why. Because so many people out there say, you know, Andrew, you need to understand these fundamentals and you have to use that information. Yes, you can use that information, but you've got to be really careful it doesn't overtake what you think becomes the absolute. You know, you've got to actually see what's happening rather than just thinking this is going to be happening. So the examples I wanted to share with you are some trades that I took just yesterday on Thursday. So go and have a look at your charts for Thursday, the 21st of January. And I shared some of these trades with my clients on the membership site, and I also discussed some on my live webinar with clients just last night. And as an example, the Euro Canadian dollar has moved over 2,000 pips since the beginning of December. Now, I took a sell trade on the Euro Canadian dollar yesterday. It's gone up and up and up and up. Just have a look at the charts. It's a massive upward movement. And most people would look at that and thinking, yeah, the Canadian dollar is getting absolutely hammered. So why on earth would you want to be taking a sell trade on the Euro CAD, which is effectively saying weakness in the euro and some strength in the Canadian dollar? But that exactly is what happened. But I only took that trade because I saw the setup showing on the charts. Now, I'm not to say that I'm taking complete reversals against 2,000 pip movements all the time. I'd much rather wait for a pullback and then ride it back up again, because long term it still looks like it's about to go up further. However, there was a great reversal trade setting up, and it was a great opportunity to make some money on that pullback or on that retracement, because as you know, a market cannot go up and up and up forever. At some point there has to be a time where the market pulls back and retraces, and if you understand how to trade as a technical trader, you can find those opportunities to ride the market back down again and get out. Because yes, I'm trading against a massive 2,000 pip movement, yet I still made a great 3.6 to 1 reward to risk trade yesterday, or a 1.8% account gain with only 0.5% account risk against that massive trend. Some other examples from just yesterday: the Canadian dollar against the Swiss franc, that's gone down over 1,000 pips in the last month, yet there was a great buying opportunity there. The Canadian Japanese yen, that's moved over 1,400 pips in the last month. And then you go to a longer term example, the US Canadian dollar has moved over 5,300 pips in largely one big straight upward movement since around April of 2011. 5,300 pips. Now, of course, it didn't do that in a straight line. It's had pullbacks and it's gone up again. But when you look at the longer time frame charts, there's been that massive big movement upwards. Yet there's been a great opportunity to sell the US Canadian dollar. And again, I'm not looking for that to move thousands of pips. I'm just looking for it to move over one day or maybe over a couple of days and then be out of the trade, and then look for buying opportunities again later on that same pair. So moving on from there, it really comes back to the fact that as a technical trader, you need to see what's happening on the charts right now. Understand them, read how to use them, and try and get your mindset away from what's out there on the news and oil's dropping and gold's dropping and everything else is dropping and the recession's coming, and therefore commodity currencies, as an example, are going to just weaken and weaken. Yes, they probably will longer term, but certainly there are opportunities when you have retracement. So that's the important information I wanted to get across to you, is to trade what you see on the charts. Elsewhere, I just wanted to quickly remind you that if you are in the Hong Kong region, try and get along to the IFX Expo in the Hong Kong Convention Centre. It's on next week. I'm speaking there on Wednesday. and I'll be on a panel, and so you can come along and say hi, meet me, and see me speak, and I'd love to catch up with you. So this time next week I'll be bringing you my weekly video and podcast from Hong Kong, and I look forward to sharing the information that I find out at the show and at the Expo with you this time next week. This is Andrew Mitchem, the Forex Trading Coach. Have a fantastic weekend and a great trading week next week.